Okay guys, welcome back. In this video tutorial, we are going to go through in trend breakout entry methods. Okay, so just like if you've seen my previous video on accumulation breakouts, there's a very similar method that I use in order to trade with the trend, right? So sometimes you see that price isn't accumulating and there's a lot of momentum in the market and there's a lot of fear of missing out, but people will basically try and catch the top all the time, catch the top. You don't need to catch the top. All you need to do is read price action properly. And in this video, we're going to go through how you can identify when the market is going to change and when to enter safely. And again, very, very little drawdown in this strategy. So stay tuned, hit like, and save this video for later. Okay, so when the market is trending, when it's moving and there's momentum behind each market push, okay, you're going to see an impulsive move down or up, okay, then you're going to see a pullback, and then you're going to see another impulsive move, and you're going to, at the start of your trading journey, you're going to keep missing out on these or getting it wrong, right? And the majority of the people getting it wrong are basically they're trying to catch the top of the move, right? But the problem is you don't know how far this pullback's going to come. It could come back, halfway. It could come back 75% of the way. And there are occasions where that impulsive move fully retraces all the way back and then moves down again. And all it's doing is so it's pushing down, it's coming back, it's collecting some more orders, and it's pushing down again. Maybe it pull back again, then it push down again. So if we look at the actual structure within the market, okay, if we've got a high and then a lower low, okay, and then a lower high, okay, identifying where this is near on impossible. There are methods out there that will help you if you indeed want to trade this way, but this is not the way I trade. I don't think it's very profitable because I like to trade with the assurance that price is going to move in my direction. Right, so price moves down, pulls back. We don't care where it pulls back to. All we care is that we want this move here to be in our favor, right? So we want to be involved in this move, but we want to be involved after the low is taken, because if you're anticipating where the market's going, right, from up here, what if it came down and then created a new low and then a new higher high? Because it's very possible, right? So in terms of how this looks like in candlesticks, you see something like this, right? So you've got the impulsive move down, okay, and it will kind of create a level because the next candle or 2 or 3 or 4 candles, they will create support, new support sometimes in the market, as we're currently seeing on gold. And what you need to do then is you need to identify your entry point, okay? So if this is the low here, okay, again, you can do that with a horizontal line on the wick, or you can do it with a zone if that helps you. A lot of people at the start like to use zones because putting an actual horizontal ray can be quite difficult to place correctly. So put a zone or horizontal line there, and then we're not paying too much attention to these candles at the minute because obviously they've changed color. They've gone from red to green, which means that price is pulling back. And this does a couple of things, right? So if we just look at these two candles here for a second, this is a low, and then we've got a high and a high high. Okay, we've got a high and a high high, right? So for the moment, price is pulling back. We're not overly interested in taking any shorts, because if price is going to make a higher low, it's going to make a lower low. We want to be involved with the move that's making that lower low, okay? So once we've identified the breakout or the long impulsive move, okay, we're then going to wait patiently, and we're only going to be entering these during high volume periods of the day, right? So London session 8 to 11, New York session 1, 2, 3 o'clock in the afternoon, all right? So identify the push, okay, that's pretty simple. It's going to be a long, very long candle normally. And then you need to wait, right? Pay attention to the wicks on a 30-minute, 1 hour, and sometimes on a 4 hour. Wait for the pullback to occur, because these will be one of two things. One, it's exhaustion, right? Because all the selling is occurred in this candle here. It needs to take a breather. It's going to pull back, but also this doing another couple of things, right? So what you have is early sellers here. All right, so these guys here will get in and try to catch the very top on a 1 minute time frame or whatever, and then price won't break this low here. This is the most important low. So we're looking at this low because this is the push down, and this is the pullback, this is the push down, right? So we got the low, we haven't broken that low, we still haven't broken that low. We're creating higher highs as we go, but then the next candle, okay, this one here, this one is creating a lower high. All right, so this wick doesn't pass the previous high. So if we're anticipating the next market move, okay, what we're going to do in order to get into this trade at the best possible price? Well, just the same way as I trade the breakouts in the accumulation breakouts and 4 hour zone breakouts and any other type of breakout, if we're anticipating that this candle has now created a new lower high, what's the next part of the market structure that occurs after a new lower high? Well, it's going to be a new lower low. All right, so we got a low, we got a new lower high, okay, created here, and then the next part of the market cycle is we're going to now create 9 times out of 10 we're going to create a new lower low. All right, so we need to place stop orders below here, right? Because if we do not break this level, there's not a very high chance that we're going to create a new lower low, right? If this low is not taken out, this generally doesn't happen, right? Price will keep on pulling back until that moment occurs, and then it will slam down, and you missed out, or you've hit 2 or 3 stop losses in a row by trying to get in too early, you're too impatient, too greedy, trying to make too much money by trying to catch the highs, right? We're not interested in catching the highs. We're interested in trading with the momentum in the market, okay? So as this low goes, all right, what's happening? It's a couple of things happening here, right? Stop losses being taken, plus the creation of the new low, and the momentum shift is happening again, right? So that momentum is now moving from exhaustion and a pullback and a liquidity grab. It's moving again into another push down, right? Because that's how the market moves. It moves up, it moves down, it moves up, it moves out. So you could kind of say to yourself, well, market breathes in, market breathes out, market breathes in, market breathes out. Okay, so we want to catch the breathe out, and when it breathes in, we're not interested, and then when it breathes out again, poof, we want to be involved with that. Right, so stop orders below the wick by maybe 2 or 3 pips. Okay, and don't worry about it being 2 or 3 pips below, because whoever you're trading with, whether it's a proprietary firm or whether it's your own broker, they're going to have spreads. And the spreads can sometimes just tag you in if you're too tight. So we don't want to be tagged in and then price continues pulling back. That's not what we want. We want a couple of pips breathing space below this. So if we're actually going to move down, you know, and there's going to be a lot of momentum behind that move, we want to make sure we're getting in at the right price at the right time. Okay, so stop losses will go above the high, and if you want to be a little bit more aggressive, go above the high of the breakout candle. As this candle moves, you'll see it move down, break, pause, break, and then it will break again. Once it gets past this wick here, generally that candle will just blow the doors off, right? And then what it will do, you might get another little pullback and then go again, and then we'll get another pause, right? And then so this will normally happen in 3 phases, three market pushes, right? So you get phase 1, phase 2, phase 3. That's market cycle, which I speak about in a different video in the Forex Simplified course, right? You also get that during the day period as well. So you've got, maybe you could say, Asian market push, London market push, New York market push, if the market is obviously trending and it's not ranging. So if we take a little bit of a closer look at this here, right? We got our push down. Maybe this is wave 2. So we've had the London breakout. Boof, that's great. Okay, we need to wait maybe between 11 and 1 o'clock. We need to wait for this pullback to occur. And I've drawn this little triangular shape here, because if you start to pay more attention to the wicks, okay, as the wicks are forming, so we've got the low, and then we're moving up, and then we're moving back down again. Follow the pattern of the wicks, because so many traders overlook wicks in the market. They say wicks are liquidity grabs, wicks are exhaustion, wicks are this, that, and the other. If you actually read the candlestick anatomy, which again I've got more video tutorials on in YouTube and in Discord. Once you learn to read it and you understand the basics of how they work and how you don't need to filter down to the 1 minute and 5 minute time frames to be able to read pure price action, right? We got the creation of a high. Not interested in getting in here, right? I've done that so many times and got burnt in the past. It's not a great way to trade. Don't try and catch the high. Try and catch the move as it's happening, right? So we've got two examples here. We've got, it's pretty much the same example on both, right? We've got the market push, pullback, push, pullback, push. And the safest way to get in is here, right? Below the previous low. Because if we take a look at this again, right? Market moves down, pulls back, moves down, pulls back. These pullbacks are generally smaller candles, right? And there's not a lot of volume in them. When the market then pushes again, you're thinking to yourself, oh my God, right, wait for the close, wait for the close. Well, you don't need to wait for the close, because in that anticipation of where the market's going next, you just read the candles, the wicks of the candles. So market moves down, pulls back, creates a high, forget the high, right? We're not interested in the high. It could be an aggressive entry here before it breaks out, but that's for another video, because that's more of an impulsive entry, right? When this candle starts moving down, it starts to break this low. It's broken that low, and now it's broken the actual low. There's very, very high chance, and I'd say 85% chance that is going to follow through, and you can hit your take profit in about 30 minutes, maybe 45 minutes at the push. It takes more time to watch, sit on your hands and pay attention, just read the candlesticks as they're forming, than it does to enter and exit a trade, generally as a rule. I've had trades in the last couple of weeks, 9 minutes, 30 minutes, 45 minutes, right? I'm in and out, but I'm spending more time watching and paying attention, and the candlesticks and the charts will actually paint you a picture, right? So one more time, we push down, we wait, and we wait, and we wait for the new lower high to be formed on the candlestick. As we've got this lower high, we place our stop order below the previous low candle. So 30 minutes, 30 minutes, 30 minutes, it's an hour and a half. And then on the fourth candle in this example, the fourth candle, all right, so 2 hours of trading basically. The fourth candle is your entry candle and your exit candle, maybe the next one, okay, depending on whether or not you hate to take profit. This is pure market structure in terms of 30-minute candles. So go and study this, guys. If you have any questions, obviously hit me up in the chat room. Send in your trade examples, trade entries, and we can review them together. And yeah, thanks for watching. See you in the next video.